Gold prices have rushed to new all-time historic highs of $2,222 an ounce after the Federal Reserve signaled a very dovish stance during their March 20th meeting. Now, the surge in gold prices confirm projections that we are in a new commodity supercycle, and gold prices are forecasted to keep rising as the stock market creeps closer and closer to a crash. Although for now, the Fed is maintaining interest rates at 5.5%, Fed Chair Powell has confirmed that there will likely be 3 interest rate cuts this year, and starting as early as the summer. Now, the Fed dot plot, which is a visual representation of the projected future interest rate changes, shows a decrease in rates to below 3% in the coming years. And what's very notable about this is that the cuts are predicted despite the estimated increases in GDP and inflation for 2024. And now, historically, gold has an inverse relationship to interest rates, meaning that when interest rates drop, gold rallies in price, and this reflects the perfect scenario for gold to continue to grow with lingering inflation and lowering rates. Now, gold prices have hit new all-time highs for the 3rd time this month on the Fed's announcements, breaching $2,159 an ounce, $2,180, and now $2,200, creating back-to-back all-time record highs within a few weeks. Never before in history has there been multiple all-time record highs in such a short span of time, and it leaves us all wondering what comes next. Now, since 2021, Goldman Sachs, JP Morgan, Bank of America have all been calling for the beginning of a new commodities supercycle, going so far as to call commodities the preferred asset class over the next decade. And here we are now 4 years later, and that supercycle is only speeding up, especially for gold, which is positioning itself as one of the best performing asset classes of 2024. Now, gold is being driven by powerful tailwinds, including rising geopolitical tensions and strong central bank purchases. In addition, we have the Chinese demand, which is growing as their economy becomes unstable. And here at home, a high-stakes presidential election is also sending Americans looking for hedges against upcoming uncertainty. Gold is now finding its support above $2,100 an ounce, and analysts are expecting gold to break $3,000 an ounce much faster than anyone expects. And while the Federal Reserve has maintained a data-driven decision-making process, some analysts are assigning a very political motivation to it. A dovish turn of cutting rates would boost the stock market and make investors across the board happier with the current administration, as well as delaying the onset of the impending recession until after that election takes place, thus sparing the current administration the damage that a recession would cause to its re-election chances. And in addition, a rate cut would help ease the growing pressure the Fed is facing while dealing with astronomical government debt. Across the board, the debt is being recognized as an existential crisis for the country, and by reducing rates, the cost to service our debt would decline and buy the government a little bit more time to kick that can down the road. Ultimately, though, the market will fall, recession will begin, and that national debt will have to be dealt with. And when that time comes, the demand for gold as a safe haven investment will likely spike much higher. Now, if you're concerned about the trajectory of the economy and you're looking for a safer place to invest and protect your accounts, I'm Makai Block with American Hartford Gold. Give us a call today and we'll discuss how adding physical precious metals to your portfolio can give you the hedge that you need.
Discover how gold can help you protect yourself and your family. Call today or visit our website for more information at AmericanHartfordGold.com.